South Asian hospitality market has had a phenomenal year. India in particular has witnessed tremendous growth. For our next session, we have Achin, Khanna, Managing Partner, Strategic Advisory, Hotelivate, discussing the industry's growth potential with some of the region's leading hotel development champions. Achin heads the firm's strategic advisory practice. His experience in the consulting field ranges from feasibility analysis to strategic consulting both in India and internationally. He is joined on stage by Mr. Christopher Wong, Senior Vice President, Development, Asia Pacific, Four Seasons Hotel and Resorts. Mr. Clarence, Senior Vice President, Development, Asia Pacific, Hilton. Mr. Elie Younes, Executive Vice President and Global Chief Development Officer, Radisson Hotel Group. Mr. Shawn Hill, Chief Development Officer, Asia Pacific, excluding Greater China, Marriott International. And Ms. Serena Lim, Chief Growth Officer, the Ascott. Please do give them a round of applause.
Okay, good evening, everybody. And thank you for being in the room later in the day. I know it's beginning to get a little tiring now, and we're going to have, hopefully, what we plan to do is have a crisp 45, 50-minute discussion. Ladies and gentlemen, thank you for taking the time to be on stage with us. I think this is an interesting panel, to say the least. We've had, as Trisha mentioned, somewhat of a spectacular year in Indian hospitality and South Asian hospitality. And I was chatting with somebody last evening at the Four Seasons dinner, and the question they asked me was, so, you know, things are going well. What does success look like now? And my answer to them, and I think a lot of you would reckon with that, is this is what success looks like. This is success. You have 700 plus people here, a lot of smiles in the room. We've had a good year. We're all looking forward to another good one. And what better way to talk about it than to talk about some of the foremost authorities in growth and development across the brands in this part of the world. With that, if I could start at the very end with you, Serena.
Yes.
30 seconds, what do you do for Ascott? A little bit about yourself also, if you will.
Oh, sure. So my name is Serena, and I'm the Chief Growth Officer for the Ascott Limited. So we are a global accommodation provider, and we are based in Singapore. So we started the journey of hospitality as a owner-operator. We started off in service apartments, but as we grew our brands, as we made strategic investments into platforms such as Quest in Australia, a regional hotel brand in Indonesia, the Citadines in Europe, and finally Oakwood just 2 years ago, we have now extended our management beyond service apartments. We're also into hotels, into co-living, into active senior living, and also into resorts. We have about 950 properties, 80% in Asia Pacific, and 80% under third-party management. The rest of the 20% is owned by one of our funds. So I'm based in Singapore, and I'm very happy to be here.
Thank you. Shawn, a little bit about yourself and what you do at Marriott, please.
Okay, so my team and I, we look after hotel development and branded residential development across the APEC region, so that excludes Greater China. So for us, that's South Asia up to Japan and down to Australia and New Zealand. And globally, obviously Marriott has a very large footprint of about 1.6 million rooms, but within this region we have, including China, about 1,100 hotels. And within India, we'll be opening our 150th hotel next month. And we have about 28,000 rooms in the country.
Splendid. Thank you. Elie, over to you.
Hi, I'm Elie. I am the Global Chief Development Officer at Radisson Hotel Group. Also the Global Chief Owner Representation Officer at the company, because I try to represent owners in everything that we do in the organization. We've been in India for now 25 plus years. We have 165 hotels in the country, open under development, and India is a country that's very close to our hearts. Look forward to a nice dialogue with everybody.
Splendid, thank you. Clarence.
Hi, good evening everyone. I'm Clarence and from Hilton. And my team and I look after development as well as architecture, design and construction. And slightly different remit from my friend Shawn. I look after the entire Asia Pacific. I'm charged with maintaining our mantra as the fastest hotel growing company here in Asia Pacific. Across the patch, we have 760 hotels trading, with about 861 in the pipeline. India represents a very important market for us. We'll continue to invest in India, and that's why we're here today.
Thank you, Clarence. And Christopher, finally.
Hi, everyone. Christopher, Four Seasons, based in Singapore, which is where our regional head office is. And out of Singapore, we cover entire APAC, and I oversee the development function for APAC, including India, of course. Everyone on the stage today, we're probably the smallest. We have 130 hotels globally today, 130 odd, another about 40 or 50 in the pipeline that we expect to roll out in the next 3 to 5 years. On top of that, we have about 50 odd residential that is open and operating today, and another 30 that is due to open. So we continue to be a single brand company, and I think the plan is for the foreseeable future that that's the direction that we'll continue to take.
Thank you. And I'll start with you now, Christopher, and we'll make our way
Sure.
back. If I could make a plain speak question, Four Seasons, as you very rightly point out, is not necessarily always about scale. It's about quality more, or maybe very discerning assets that you think fit the brand portfolio. We have 2 Four Seasons operating in India. Many of us had the opportunity and the pleasure to visit one of them last evening. That being said, India is large enough, clearly, to have a few more of your hotels. What's the India plan? What's the strategy? What can we hope to see?
No, I think India is an important market for us as well. Clearly from an outbound business, I want to say it's probably in some of our markets, India last year was either the top first or the second source market for us. So it's definitely a market that we're very keen to grow our presence in. But being a single brand company, in terms of growth is, anywhere we go to is always going to be more limited. But specifically as it relates to India, where we like to see ourselves next, Delhi is a market that we're very keen on having a presence. And I think after Delhi, we're certainly looking at growing our leisure platform. Like everyone else, we're looking at opportunities in Radisson, which we think will be a good fit with Delhi and, creating that circuit. We'd like to be in Goa. And, for us, we also like to be in kind of unique destinations. And it's not all about scale. And I think, our travelers, our guests, look for those unique travel experiences then, which allow us to be in, in destinations that may not necessarily support it, 100-200 room hotel, but a small hotel that allows us to build the brand and at the same time kind of deliver the experience that we need to deliver as a brand to our guests.
Sure. Yeah. Thank you. Clarence, probably a similar question to you as well, but first off, you guys have a new India face. Congratulations on Zubin being there. The question I guess I have for you is, Hilton is globally a mega giant of an organization, perhaps not echoed necessarily in the Indian subcontinent yet. What's the plan for changing that? What are the plans? How is India looking for you?
Yeah, fantastic question. I think if you look at Hilton across all the markets that we play globally, we aim to be one of the top operators in country. Now, having said that, we had a great year in 2023. We signed 7 hotels and opened a few more. And we're off to a great start this year as well. And we hope that, as you've seen from the announcement from Alan in the Economic Times, we have a portfolio of 26 hotels today, and we aim to get to 75 in the next 3 to 5 years. We have a healthy pipeline, and the construction starts have been great. What you'll see this year, we'll probably introduce 4 more hotels into the market, and with some luck, maybe push forward some to introduce some of our brands like Hilton Garden Inn in Jabalpur and Surat earlier into the system. So by the end of this year, you'll probably see us crossing 30 hotels. But the ambition has always been to grow our portfolio in India. What we see here, as you all heard and you all read, right? The economic class that is booming, the new generations of travelers, the middle class, the myriads of just variety of different type of travels, from weekend destinations to religious travel. There are a lot of white spaces that Hilton will fill and wants to fill. We have been exploring our brand strategy. Today, we deploy 5 of our 12 brands that we have within the market. Globally, Hilton plays with 23 brands. And last year, we sort of introduced at this conference, right, that we signed our first Waldorf Astoria here in India. And the same year, we introduced our next brand, our sixth brand, Curio Collection, here in Bangalore, which will debut sometime in Q1 2025. Right. We are excited about the potential of India across all segments. Having seen the last stats of active hotels under construction of over 1,977 hotels of about 400,000 rooms, 26% is active construction here in India, right? And we are very excited about that, and we want to play a role in that. For that, you will see us regionalizing more of our brands. Hilton Garden Inn has been regionalized, and we continue to introduce that into this market. We would like to introduce our scale brands like Hampton, and we are now regionalizing it across Asia Pacific. We have been very successful in China. We have about 340 trading with another 400 in the pipeline. We'll bring that brand here into Asia Pacific and predominantly in the Indian market. And we recently launched Spark by Hilton towards the end of last year. We're just looking at initial studies to see whether Spark can play a role here in this market for India.
Okay, thank you. Coming over to you, Elie. I got a data point that when we were doing some research on Radisson Hotel Group's performance last year, and I learned that you guys had a record year with 30,000 rooms between openings and signings last year, which is a phenomenally large number. What are some of the current trends driving growth for Radisson Hotel Group, both globally and regionally?
The global trend for us, and maybe for some of the colleagues here, has been last year a big traction in China. Obviously, a major traction here in India as well, which is probably outside. Putting China on the side is today the most exciting market for us globally is India. We sign around 30 and hopefully 40 hotels every year on the continent. There's a little bit of a paradox or a business anomaly now globally, where performances are at their peak from a trading perspective, but investments are at the bottom globally, probably the bottom for the last 10 years if you look at investment transactions around the world. But what has changed, or some of the tractions that we've had, and probably the others as well, last few years, has been conversions, because there has been much less new built hotels given the interest rates and inflation that we've all experienced around the world. Conversions has been a big push or a big support for our expansion, mainly in mature markets, less so in emerging markets. But India is a very, I wouldn't say isolated, but different, self-sufficient market. The consumer is domestic, the investor is domestic. There is less reliance on debt financing to build new hotels. So that has been quite significant traction that we've seen last year, and that continues this year on new built hotels, but also on conversions. We signed today the conversion hotel in Delhi, and we're signing a few others tomorrow. So I would say that's a little bit the journey that we've had last year, and which continues this year. This year is rather a continuation rather than a revolution compared to last year.
Okay, thank you. Shawn, over to you. Marriott, as we all know, already enjoys a pole position in India as far as existing supply is concerned. And from that standpoint, both South Asia/India or regionally, the question to you is, what are the top 3 regions you will see growth in your portfolio now? India, you've already got a large enough portfolio. Do you think you'll continue to see major growth here, or is it other markets you're more focused on? What's the future looking like for Marriott?
So within the APEC space, definitely India is actually at the top of the list for us in terms of the amount of growth that we're seeing. We have never seen it at this level before. So it's our largest market within the APEC region for us, and we've had the most signings from last year going into this year that we've ever seen in India. And I think the market is just generally very buoyant. But we're also seeing a lot of growth throughout the region. So other major markets for us, Indonesia last year had a record year of signings in terms of number of deals. We signed 10 deals there. Vietnam was our second year in a row of record growth there. And in Japan, we had 25 deals signed last year, which if you've looked at Japan for a while. When I first started back in the region in the late 2000s, like 2005 to 2010, we would see one deal every other year or so. So to imagine 25 deals in a single year, we just didn't think that was possible. So we're seeing that momentum continue on into this year very strong. And the other big trend that we're seeing across most of these markets is a strong interest in luxury brands. That's something that's consistent. Last year in India, actually 50% of our signings were luxury hotels. We're focused on all categories, and we think there's significant opportunity, but that's where we're seeing a lot of interest at the time, and we're seeing that as well throughout the rest of the region.
Related question before I move to Serena. Any of your global brands that are not in India yet that you're planning to bring in? Moxie recently launched not too far from this hotel. Any of the other brands that we're seeing soon?
Yeah, so just mention that. So we just opened the Moxie, so we expect once people can see that brand, we expect that to take off and actually do quite well. Very good reception on that. We currently have 17 brands open in the market. So brands that we're focused on going forward, I think the AC brand by Marriott, we expect to see traction there. We're getting a lot of interest in that. The Autograph collection, as well as the Tribute. We currently have 3 Tribute hotels open and several discussions going on. So those Autograph and Tribute are part of our collection portfolio. So I expect to see a lot more of those going forward.
Thank you. Serena, I don't know if you can hear me clearly all the way there. Okay, good. You gave a brief mention on Ascott's history and how the ethos was extended stay originally, and now you, through acquisition or investments, also have other mainstream hotel brands. I guess my point to you is beyond just serviced apartments, are there other alternate accommodation opportunities that Ascott is looking to explore, both regionally and globally? Serviced residences, co-living, things like that? Or are we looking at serviced apartments, hotels, full stop?
So to your point, in Ascott, we actually do operate across quite a number of different asset classes, from co-living to hotels, to extended stay, as well as active senior living. And each market is very diverse because the trends, the demand generators are very different. I think something that we see very, very strong, 2 trends particularly stand out for us. I think the first is that when it comes to service apartments, that the demand for service apartments in terms of both owners wanting to do those as well as consumers is increasing. So the market share of extended stay and service apartments entering the hospitality space is increasing. And I think that's for many reasons. I think one is also to do with, for example, we were just having a conversation that for many of us, we are doing longer trips, but less frequently. So short trips are getting longer, long trips are getting shorter. And so with this, you find that the whole desire to stay in a service apartment increases. And so we're seeing that service apartments now are also being seen as a mainstream asset class, a mainstream choice for consumers in their travel. And so we remain very, very robust in terms of growing our market share in service apartments because of the trends that we're seeing. The second trend that we're seeing also is the rise of the lifestyle, the desire to have a very authentic, a very experience-led experience in the various properties. And so for us, our lifestyle, our penetration into lifestyle is through Life, which is our co-living brand. And co-living is a word that has many different definitions globally. So in Ascott, the way we define Life is experience-led social living. And that we find is a huge demand moving forward. And so Life is a brand that we're going to be pushing out in a very big way. Basically, it's targeting in technopreneurs, digital nomads, corporates, solo travelers, people wanting to come together to commune, to meet new people together, to experience social living together. So with these 2 mainstream asset classes, this will be our focus for South Asia. So in South Asia, we currently have 7 properties which are operating, so are relatively smaller compared to some of the panelists. So we have 7 properties which are opened, just under 1,000 keys. We just signed 3 Oakwood properties over the last 6 months. So definitely the service apartment demand, we see it increasing, and we are also looking to launch co-living our experience-led social living here in South Asia as well. So our focus here is these two asset classes, but globally, for example, is in Malaysia, in Indonesia, for example, in Thailand, all 5 asset classes will be full steam ahead in some of these countries.
Okay, thank you. Shawn, I'll come to you and we'll move our way back. One of the pieces of news I read recently was about how Marriott is planning to launch 8 of their core brands in the all-inclusive space. And what I read was that the Ritz-Carlton, the Luxury Collection, Marriott Hotels, Westin, W, Autograph Collection, Tribute, and Delta are all going to have an AI option, all-inclusive option. For the benefit of the audience here, would you briefly speak about what you mean by all-inclusive when you bring that to market? And do you see that as an opportunity in India?
Sure. So Marriott got into the all-inclusive space in 2016, actually, with the Starwood merger. We picked up the Westin in Costa Rica, and that was our first experience. And we kind of cut our teeth on that property in terms of learning the business. So all-inclusive, you have a very simple pricing model for the families. And around that same time in prior to COVID, we were seeing a big uptick in our leisure business, growing faster than our other segments. So we were trying to see how can we really focus on that segment. And so we started to look at going into the AI space or all-inclusive space. And fast forward several years, post-COVID, we saw that desire for families to have a very easy way to book their trips, a no surprise pricing model was very, very popular. So we currently have 49 hotels open in the all-inclusive space, and we started with 1 in 2016. And we expect that to grow rapidly. We're focused primarily right now in CALA, in the Central America, Latin America region, but we're seeing interest in Eastern Europe as well, and we're also starting to get inquiries in Southeast Asia. So at first it was in a more moderately priced segment, but we found that actually all of our customer segments, both above and below that, are interested in this model. The customers really like the simplicity of it. They really like the fact that they just pay one bill at the end of the trip. So we do expect that business to grow. We're going to open approximately 6 more all-inclusive hotels this year to add to the 49 that we already have open. And I expect it will come out to APAC in the future, but I think this market is probably further behind than the rest of the world just in terms of understanding that model. But I do expect in the future we'll see it here.
And I'm just curious to add to that. Does a typical all-inclusive hotel have a higher or lower GOP than a traditional hotel? I mean, all things being equal.
Higher, yes.
Higher, right?
It does, yeah. And it helps. We can do conversions for all-inclusive, but it does help to actually design it as a new build with that in mind because it can help with the efficiencies.
Okay, thank you.
Model, yeah.
Elie, I wanted to talk to you about 2 specific brands in the Radisson Hotel Group portfolio. Both of which are relatively new to India. One is the Radisson Individuals Retreat brand, and the other is your Radisson Collections in the luxury space. If you'd just share your thoughts about your strategy with both of these brands from a growth standpoint and the India opportunity there.
There are a little bit of similarities in the spirits of the 2 brands in terms of they allow the owner to have more individuality on their assets, so the assets to have more persona. Radisson Individuals was retreats, is a derivative of Radisson Individuals, which we actually launched during COVID. And in India, we have now 165 hotels. We have urban hotels, we have pleasure hotels, we have all type of accommodation for our consumers. And what we have found last few years, there was a need by our customers or hotel guests to have something more experiential, something that gives them more access to or a connection with nature, with themselves, in some respect, to more access to culture, something more truthful, something more purposeful, sometimes more well-being related, and they tend to be a bit more less urban, a bit more rural in some respects. So we try to design that for those consumers. And from an owner's perspective, to give the owner of those units, who tend to be in the Himalayas of the India, access to those consumers. Because you see today, we consider ourselves to be both a domestic and an international brand in India. We've been here for 25 years. So we allow, in other words, the owner of those assets to have access to the domestic consumer, which knows us very well, but also, and hopefully in the future, not anytime soon, because it's mainly domestic market now, access to that customer. We launched it 2-3 years ago. We learn as we go. We have a few hotels now. It's been reasonably successful. We'll see as we move forward. Radisson Collection, on the other side, is a little bit more of a collection of luxury hotels across the world, which promise the consumer something different every time they visit the hotel. And many of my colleagues here have in different shape or forms, one or more of these brands. Has been something that has been evolving over the last 10 years now. We launched it 5-6 years ago. We have 60 hotels. We launched Radisson Collection in India 2 years ago. We have now 2 hotels. Moving forward, probably if we sign 30 hotels every year in India, we would say maybe 2 of them will be Radisson Collection. The scale of the opportunity in India today, the way we see it, is mainly in the upscale segment, and that's Radisson for us. But certainly Radisson Collection will complete our offering to both our guests and our owners in the market. And that's Radisson Collection.
Thank you. That's helpful. Clarence, we found an interesting piece of news about Hilton finalizing an agreement with AJ Capital to acquire Graduate Hotels. And as I understand it, it's an interesting lifestyle brand. And I also, I think all of us have been seeing the growth and the advent of lifestyle as a concept across the brandscape and across hotel companies. Do you believe that there is an opportunity for that to grow under the Hilton flag in this part of the world, whether it's Graduate or any of your other lifestyle brands?
Right. How I answer that is, I think lifestyle is always a trend, right? And we've been seeing this now maybe for the last 10, 15 years across the different companies. And over at Hilton, just in the last decade alone, we have introduced the following lifestyle brands: Canopy by Hilton, Cura Collection, and most recently, Tempo and Moto. And you spoke about the acquisition in AJ Capital for this new brand, which is Graduate Hotels. Graduate Hotels serves a very unique segment of lifestyle brands, predominantly in Ivy League universities, university towns across Americas, and some of which across all the prestigious universities across Europe. Why do they exist? Because these universities are deep in tradition, whether local, strong alumni, nostalgic, and has a strong following. And when their parents visit their children, they want to be there. When the alumnus is big, they all want to gather around the university. And when there's intercollegiate games, this is where these hotels thrive. And we have found that there is a great business model there to yet offer a different class, differentiated, centrally relevant, differentiated product for lifestyle luxury. Having said that, I think across this part of the world, we may not see a lot of that happening, which is why I think the other collection brands and lifestyle brands have been very successful here in Asia Pacific. Last year alone, we introduced 4 Cura collections, 3 of which were in-the-year conversions. And in this tight labor market, high cost, high land costs, right? I think conversions are what all of us around the table are looking for. And hotels that have their unique identity in this current condition are looking for a brand that can offer them distribution and immediate customers to solidify their brand story and to trade profitably, right? We had conversions in the next Cura collection in Melbourne. We had converted the Humber House in Taipei, as well as the USG Hotel in Guangzhou. As I mentioned earlier, we offered the conversion strategy to a hotel here in Bangalore with the Austin Roach, and they will debut our first Cura collection here in India next year. So I do believe that the space for collection brands and lifestyle brands is here to stay. There are many different traveler needs, and all the brands exist to fit the different consumer needs. And judging by India becoming the 3rd largest space in terms of accommodation, I do believe there is a place to play.
Sure, thank you. Christopher, I wanted to talk to you about something that, again, our research as Hotelivate in the last year and a half has been telling us repeatedly that the one buzzword that has caught the world's imagination is wellness. And it is no longer just about a great treatment in a spa. There is a whole wellness economy out there that runs into trillions of dollars, and that's clearly the way the wind is blowing. And we found an interesting piece where we understand Four Seasons and Red Sea Global have announced a luxury wellness resort in Amala, Triple Bay. How do you envision the wellness space, and what's Four Seasons' view on capitalizing on the growth of this trend, if I may?
No, it's, I think it's more so post-COVID, we certainly see kind of the wellness piece growing. I mean, the wellness concept and, buzzword has been around for a long time. But I think beyond just wellness-dedicated resorts that we're doing, we're also evolving how we do wellness and how we deliver wellness experiences within, the individual property. So, I think gone are the days where you have a nice spa and a fitness center and it stops there. So we are, our vision is to basically to really expand that product offering. So for example, you may see in future within the Four Seasons Hotel, we may have a section of the rooms being what we call, wellness villas or wellness rooms, where, we go down to the level of making sure that from a design perspective, they're using the right materials, they are the acoustics, the lightings, we will have things like, sound to sleep machines in there. And those are truly meant to be, a room that will promote wellness and well-being as part of a larger property. I mean, we understand that, it may not be possible to have all the rooms that are, wellness rooms, but the idea is, similarly where you may have, an example, an executive floor. The idea is that then within the resort you have a wellness portion of it. And beyond that, there's also, we are thinking things like, pre-arrival consultation. So, consult with our guests coming in terms of what they're looking for. Things like providing wearable devices, so that when they're in our hotel, you're able to monitor their performance, things that they're tracking. And increasingly, we're also looking at working with third-party providers who are in the medical wellness space. So Four Seasons, we're not in the medical wellness space. We know we don't do that well, but we're working with third parties that would co-locate within, a larger Four Seasons resort, and together with Four Seasons and, the medical wellness operator, build out the reputation of the destination and the property. So yeah, I mean, in terms of that, we certainly see it evolving and increasing focus in terms of, how we're programming our wellness space beyond the, traditional spa, massage, fitness. So it's exciting.
Sure. Okay, I'm going to try and shift gears a little bit, make this a little bit quicker and more interactive, because we're all going into back and forth and Q&A. So quick questions to you. Serena, this is to all, perhaps all four of you, because I know your answer, it can't be different. For each of the panelists here, choose one and only one brand that you think has the most chance of success over the next 5 years in India. And it's easy for you to answer that.
Easy answer for us, yeah.
But Serena, if you had to choose one brand, that's an audience question that I've picked up.
One brand.
Yeah.
Oakwood.
Oakwood. Highest chance of success in India.
All are successful, but yes, I think if to answer to be a very disciplined Singaporean.
Fair enough. What about you, Shawn? The one brand in your bouquet that has the most chance of success of growth in India?
I would say Autograph, which is one of our collection brands, because there's a lot of interesting hotels in India, and I think that brand could be a good affiliation that people can bring into the system. Yeah.
Elie?
With no doubt, it's Radisson for us. We'll probably sign 10 to 15 every year.
Okay, and Clarence?
Hilton Garden Inn. All right, we spend a lot of time regionalizing the brand. Hilton Garden Inn represents an upscale product at an affordable price point, and we believe in this market and across Asia Pacific. It's also very much a franchisable brand, which is something that we don't talk about a lot these days. Owners out there are craving for better returns, and if you have a prototypical product that allows an 80-20 rule within an owner and an operator to benefit from the rising consumer needs, the Hilton Garden Inn brand, I think is poised for success.
Okay. And on the topic of franchise, Serena, coming back to you, would you franchise in India? Is that something you're open to doing?
So franchise is something that we are looking seriously into. I think one of the things that in Ascott we do want to grow and with economies of scale. So franchise is we are looking at it, and we are also establishing platforms currently in Europe as well as in China. So that's our immediate focus. We'll be also looking at India as well to roll out franchise. So to your answer to your question, in the immediate term, we'll be focusing on China and Europe, but definitely, we will be launching a
I had a
franchise platform in
related
India.
question for you, which I had made a note of.
Yes.
Very popular brand in Australia, Quest, that you
Yes.
guys acquired.
Yes.
Any plans of bringing that to this part of the world?
So Quest is a regional brand which we acquired in Australia. It is a business format franchise model brand. I think that in relation to our growth ambition here in South Asia, we feel that we actually do have 14 brands altogether, and our focus would be on looking at, for example, the Oakwood brand, which we talked about just now. Oakwood is a very well-established brand here in South Asia. So when it comes to service apartments, you'll be looking at Oakwood. We'll be looking at Citadines, Ascott, Somerset, for example. These are brands which already have a presence here. And also looking at Life, which is our experience-led social living, a brand that we are positioning in the upscale space. So Quest will keep to the Australia region and also the New Zealand region for now.
Sure.
For South Asia, I think that we have enough brands already in the market that would, again, allow us to have that long runway for Ascott.
Thank you. Shawn, another buzzword that we've been hearing a lot of lately is branded residences. And I know they are a popular concept in many parts of the world, relatively new to India. We also had Penny from Marriott speak to the owners yesterday about Marriott branded residences and so forth. Do you believe there is enough depth in the Indian market, or do you think your India team is probably better placed to answer that, to actually meaningfully do justice to the investment of branded residences?
Absolutely. I think there's a huge opportunity. In fact, as you know, Marriott's the largest operator of branded residences. We have 230 open and signed branded residences around the world. But we have actually set up a branded residential team in APAC with a dedicated developer, dedicated legal team, dedicated marketing team, and operations team. And we're working on projects now and many discussions within India. Actually, we signed our first branded residential project recently in Hyderabad. And we expect significant growth, I'd say, over the next few years in branded residential across multiple brands.
And you believe there is a market enough, both from a buyer appetite standpoint and a builder return on investment standpoint?
So from a buyer standpoint, there's an increasing number rapidly of high net worth individuals and ultra high net worth individuals that have the finances to buy higher end apartments, although we do branded residences at multiple levels. And they love our brands, they love the lifestyle of the brands, the feeling, the look and feel of the design, and they want to live in an apartment that has the services offerings that we have as well as the design aspect. Plus the big factor is the turnkey component where people can just lock up and then we take care of everything from there when they leave, plus the security aspect of it. So based on the third-party studies that we have done regularly around the world, including within this region, we look to see how much are the branded residential projects yielding versus non-branded. And on average, we see about a 30% increase for the developers. They get a premium by adding the brand on top of it. So it's a significant uplift for the developers when they're looking to do projects. And if there's financing issues or things like that where they have to get additional capital, it's a great way to finance the hotel projects.
Sure. Elie, if I can pose both those questions to you also briefly, does Radisson have openness in mind to franchise in India across some of your brands? And two, is branded residences something you guys are interested in?
50% of our business today in India is franchised.
Yep.
So moving forward, probably it will stay the same. So we already do that. We're already open. for franchising, naturally for the right partners to run the hotels. Of course, like everybody else, the more you go into upper upscale and luxury, the less you may be willing to franchise. The more you go down in the scale, the simpler the operating model, and consequently, the more you'll be willing to franchise. Branded residences, I think, in general, moving forward, I see, and we as a company, in some respect, more fusion between hospitality and residential. I even see more fusion between hospitality and our industry and many other places where you sleep, except maybe for hospitals. So long you sleep in that building, I think there's an opportunity, if we think a little bit outside the box, to add some kind of value to that type of accommodation, be it residential or otherwise, so long you sleep in it. It could be hostels, it could be student accommodation, it could be co-living. You just have to find that formula that adds value. And we're in the middle of I'm working with a small team on something called alternative lodging to try and find the formulas for those type of accommodation. We believe in branded residence. We're not as good as you guys at it, but we'd like to catch up as quickly as possible. We do it. We haven't done it so far extensively on a standalone basis. You do it on a standalone basis, i.e. without a hotel component. I see the value add for the owner. I see also the value add to the brand because there is immediate cash flow associated to it from an economic perspective, but also the brand expansion. So that's the answer.
Sure. Same thing over to you, Clarence. I think both franchising and branded residences, India story.
Well, in our experience at Hilton, I think franchising works best when there's a franchising community, not just in hospitality, but across the service industry, quick service restaurants, supermarkets. So when the franchising community is big, I think then franchising laws are a lot clearer. So we experienced that in Australia, in Japan, Korea, in Thailand, and most recently in China. And we've gone one step further in China to do single unit franchising. So if you are an entrepreneur, you have a piece of land or office building that you want to convert into a Hilton Garden Inn, we will offer you that brand. So we have gone as far as offering franchising to owners with zero experience, because we feel that with the support system that we've built, which we collectively term as Business Performance Center, we will support you, to engage with you, to ensure that you grow with us. That will keep both of us safe. So in this market, we are exploring franchising in a big way. We will definitely franchise to owners with operating experience. And from there, take the bigger step going forward in terms of looking at other brands. For now, the Hilton Garden Inn brand is definitely set up for that model.
Sure.
All right? In terms of branded residences, I'll qualify that into two types of branded residences that are in market today. One is basically a standalone branded residences with no or zero hotel component. That is something that Hilton is not prepared to offer in any markets today across Asia Pacific, because we don't believe that that adds value to the owners, and we can't contribute as a one-time gain in terms of a royalty fee. But if the apartment is bolted to an existing hotel, and even better, part of the hotel inventory, I think there's a lot more room for discussion across all markets. And branded residences, as you heard from my learner colleague, it is a trend that is forthcoming, and it's something that we are looking at seriously. It's a huge opportunity. I think internally, when we value it, it's across $100 million worth of fees.
Yep. And I'm going to ask only the one question to you. I don't expect Four Seasons to franchise. But branded residences, you've done that too in India. You have the one example of it in Mumbai. Do you see more of that as an opportunity? Because it comes with its challenges. Let's agree on that as well.
No, I mean, there are always challenges, like, anything, but, we definitely see that as a growth piece for us. We're probably today one of the largest luxury branded residential operator. And again, just, building on what Clarence said, you have residences that are part of mixed-use projects, and you have standalone. Our view is a little different. We actually think kind of the standalone space for branded residential actually provides a lot of growth opportunity for us, and you know, a lot of buyers are looking at that as well. The nice thing about being kind of a standalone is, you know, you're truly exclusive, or private, instead of being part of a mixed use. But that said, you know, I think most of the standalone residences that we're currently looking at are probably two things, probably in cities that we already have an existing hotel. So in that sense, there is that brand presence, and also in, you know, key gateway cities, big key gateway cities, New York, LA, you know, Tokyo, cities like that. So it's very selective in terms of where we're going to roll out standalone residences, whereas residences as mixed-use projects, I think, you know, in terms of the scope for growth is probably a bit more. But, you know, to round up, yeah, I mean, truly, you know, we see a lot of growth potential in that, including in India.
Okay. I see two questions from the audience here. One is directed to the five of you, one is directed to me. I'm going to go with the one with the five of you first. And the question is, all of you are global leaders in development, and you deal with a lot of owners, a lot of operators, a lot of investors, a lot of developers. What's the one key piece of advice that each of you would like to share with the owner and developer community here? As a brand operator, developer, what would you like them to know? The one thing that they should be doing or knowing, especially if they're first-time hotel developers. Serena, we'll start with you.
One key piece of advice for a new hotel developer, I think that is to do the homework. I think that, you know, sometimes you see the hospitality industry as something very glamorous, a trophy project, a trophy, you know, experience. But I think that, you know, doing homework is critical. Understanding, again, the vision, you know, and the objectives of the investment criteria, understanding the location, and again, speaking to, you know, experienced consultants, I think, is also very critical. So gaining as much market knowledge, putting in the research, putting in the work to come up with the base case study for this project, because once built, you know, it is a long-term sort of investment. You're not able to sort of like, you know, move the asset, you know, from one place to another. So I think that is critical. And again, keeping a very open, open view in terms of really understanding the ambition and the vision for this particular asset. Again, having been in the business for a long time, you know, every single owner is so different in terms of why they want to build a property. And I think really coming to recognize that and understanding that I think will determine the way forward, the longer term for the asset. Thank you,
Serena. Shawn, what's your advice?
I would say to think about it as a partnership as you start to look at different operators. We often think about it as we use the analogy of a marriage, a long-term marriage, because you are in a relationship for a long time. And with the partnership, everybody up here, the companies bring decades and decades of experience, and listen to that. I think there's a lot you can learn that will make the hotels run more profitably. But on the soft side as well, I think it's very much a people business. So like anything, it comes down to the people that you're going to be dealing with in your market, in your region, and really get to know those folks, make sure you're comfortable with them. These are people you're going to be working with for the next couple of decades. So I think the people part is also very critical in terms of the partnership.
Absolutely. Elie?
Once you have the right team in place, I think it's very important that you know how to tolerate mistakes, because that fosters innovation and takes you much further than what you think. And don't be too greedy. That's two.
Thank you. Clarence?
Yeah. I think one thing that we measure very closely at Hilton is owner advocacy. And to build owner advocacy, the main thing you need to do is continue to communicate openly and continue to have that alignment. Like Shawn said, right, it's a long-term marriage. You're there for 10, 15, sometimes 25 years. If you don't have alignment of goals from the very start, then you find a lot more tension in that space. So build alignment as early as you can and build alignment constantly, because we will all go through ups and downs. This industry is not always going to be a blue sky industry. There'll be hits and bumps along the way, And the more aligned you are, the easier it is to align the goals and to continue returns in your very favorite asset.
Sure, thank you. Finally, Christopher.
I think, everything the panel said, it's, certainly important, but I think maybe specifically for us and what we do, one of the advice that we always give our owners, especially if you're going into the luxury space, is actually to right-size your property. For us, for example, it's all about creating experience. So that, we like to engage with our guests at the emotional level, create experience, genuine personal service, and that's what brings them back. And so if you're truly doing a luxury property and you get too large, it's really difficult to deliver that kind of expectations to your guests. So, we get questions all the time in terms of, people ask me in terms of, hey, what's the minimum size property you look at? Oftentimes, for us, is what's the maximum size we'll look at. So, I think it's something that, if you truly are thinking of going into the luxury space, is really to right-size your property so that you don't lose the DNA of what you're trying to achieve.
Sure. Okay, we've got 15 seconds left, and I'm going to try and take a stab at answering that one last question. As an advisor working in India, what's the one piece of advice I could share with you, ladies and gents? I moderated the owner's workshop yesterday, which I've been doing for a bunch of years now. And for those of you who were here this morning, you may have seen 10 specific asks that the ownership community in India has tabled with you. Some of them have directly something to do with you as an operator or a brand. So the one piece of advice, if I had to give it to you, this panel, it would be to please give that a serious look. This is what your owners are saying. These asks are what the ownership feels strongly about. Maybe you can't meet them to the nth degree, but do give them a serious look. If the owners are speaking in a coherent fashion and there's 130 of them saying something, I'm sure you want to listen to it. So that's my advice. With that, I can't thank you enough for taking the time. Serena, Shawn, Clarence, Elie, and Christopher, thank you.
Thank you.
Thank you. All right, guys.